Hey guys, it's 8:54. It's October 29th. It's Thursday. I just finished trading for the day. I took a trade in the pre-market, and it was on Apop, which was on the top gainers list, and it was looking like a really good textbook 3-bar play setup, and in the moment I got fooled by it, or just I guess I didn't remember all of the criteria or something. I don't know, but I goofed it up for sure. Because you see here, I'm already in it, and there's only 2 bars here. The reason why they call it a 3-bar play is you have to enter on the 3rd bar. So this is not a good 3-bar play on my part. And basically so someone was asking about the 3-bar play, and although this is, like I said, is not a perfect one, this is the beginning of a 3-bar play. It's a 2-bar setup. You're not supposed to buy it yet, and if you didn't, this would have saved you from what kind of trade this became. But what the person asked me was where you set your stop loss, right? So let's pretend that there's a 3rd bar here, or you're just anticipating, this actually turning out to be a real 3-bar play, and you want to think ahead of time, like, where is my stop going to be? As long as this second candle doesn't drop below this level, your stop would be here or 1 cent lower. And I like to do the 1 cent lower just in case, there's like a fake flush out and it bounces off. If, the difference between 1 cent is not a lot, so it sometimes it keeps you in a winning trade. So anyway, that's where the stop loss is, and I marked it out already. Even before I got in the trade, I said, okay, I'm going to get out if this thing drops 1 cent below this candle. But the problem is I shouldn't have been in it yet. And what I did there, you just saw an order go through. I was trying to sell half because it hit 248, and then but by the time I hit the sell half, it was already back down. So I sold half at my break-even price, which doesn't help me at all. Then it gets worse. But the only thing is, when I was in the middle of this trade, I didn't realize what I did, and that's not an excuse. That just shows you that I haven't been trading 3-bar plays in a while. I haven't seen them in a while. And, I guess I was a little rusty with them. So basically what's happening now in my mind is that, okay, this is still a great 3-bar play setup. It's likely gonna go and take off. And then I break a big rule of mine, which is there for a very good reason, which the rule is never, ever average down, no matter what. I can average up. So, if this thing did break the 248, I could have added more. But what I did was thinking, okay, this is going to turn into, this is really the 3rd bar right here, right? But since it's not breaking that level, I was thinking, well, maybe it's going to be a 4-bar play, which is essentially the same as a 3-bar play with 1 extra bar, and the 4th bar is the one that rips and takes off. But in that scenario, you would also enter on the 4th bar, and here you could see I'm already entered into the trade. So it was looking like it was going to take off there. So it kind of teased me again, thinking, okay, this is a good trade. This thing's really strong. And now as it comes down, I'm thinking, well, this is just like kind of a micro pullback, and I averaged down into the trade. And it was really because I was kind of upset about when I sold half, I missed that pop. I sold half at break even. Now I'm thinking, crap, this thing is going to, take off, and I'm not going to make as much money as I would have if I had my full share size, or if I had, gotten a little profit off that first pop. So yeah, I was trying to fast forward to that. That's where I averaged down. So I was thinking, okay, it's kind of bouncing around there, so should head back up soon. So I bought another $15 worth of shares, and now I've got 9 shares averaged at 240. but I still, am holding true to my original stop loss. And now this thing's flushing down, and I still don't realize what I've done at this point, that I got in way too early on this 3-bar play. So yeah, well, I just want to show you that, because at least, I mean, again, so many bad things, but at least trading has to have a lot of redundancy, because what you'll notice as a newer trader is that kind of one mistake or one break of a rule leads to another, and before you know it, you've turned a small mistake into a huge mistake, and this is how people blow up their account, right? So here I've already made a few mistakes, and luckily, I'm getting much more disciplined about taking my stops and things like that. I never hold and hope, and this is an example of it. Where as soon as it taps my stop, boom, I'm out. I don't care now anymore. I figure this trade has failed at that point, and I don't want anything to do with it now. But this is where, like I said, you once you start breaking rules, they seem to that seems to continue. And the rule that I broke there was the averaging down. And so, now, and again, at this point, I still didn't realize that, okay, I shouldn't have gotten into that trade because it wasn't a 3-bar play setup yet. What would make it a 3-bar play setup is if that 3rd bar broke the high of this candle, right? And it could have been, say, like if this first candle was higher than this one, say this first candle was 248 and the second was 246, then the 3rd candle would have to break the high of the first candle. But the point is that whatever the highest of these two candles is, the 3rd candle has to break it, and the moment it breaks it is when you're supposed to get in, and not before, right? And what did I do? I got in on the 2nd candle, anticipating that was going to happen, but it didn't happen, and you're not supposed to trade it that way. You're not supposed to anticipate it. Not to say that will never work out, but that's, the problem with doing that is that it encourages bad behavior. When it does work out, you think, oh man, look, I got in, I anticipated the 3-bar play, and I got a better entry, and blah, 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 whatever. But when you anticipate a play, you are putting more odds against you and reducing the probability of the trade working out. So it's better to, whatever the pattern setup that you're trying to trade, let it fully play out and get in at the designed entry point, which, like I said, is for the break of the high of the whichever candle is the highest of the first two. You have to wait for that to break, and then you get in. You don't wait long. Like I said, in this case, as soon as you see 249, you get in, and then you try to ride it, and then your stop is whichever candle is the lowest of the 2nd and 3rd candle. You put your stop loss there. So now what's happening is I'm thinking about revenge trading, which is another thing that I'm not supposed to do. So I've already decided I'm taking tomorrow off. I screwed up a 3-bar play, and then I broke a major rule of mine that says never ever average down. I got burned real bad after getting in the habit of averaging down and it working out a whole bunch of times. And then the last time I did it, this was a long time ago now, but the last time that I did it, it was really bad, and was like for me bad, because I take 1% losses, 2% losses on my worst red days. But this thing ended up being like a 5 or 6% loss, which I'm not, by my rules, I'm not allowed to take a loss like that. So that was because of averaging down and then not getting out, not having a stop loss in mind. Because when you average down, you're buying into a failing trade, and you usually don't have a stop in mind, because at least I didn't on that trade, because this thing's going through where stops would be, and I'm just keep on averaging down. So it really makes no sense. It's just a really bad have it to get into. So now what I'm trying to do here is look for a setup, a reversal setup. Because again, at this point, I still didn't realize that this was a terrible trade. I just thought, okay, here's a perfect 3-bar play pattern that failed, right? Not realizing that I shouldn't have been in it yet. So since that happened, that I'm thinking this was a perfect setup, that I'm thinking this stock still has a lot of potential. So let me try and get in on a reversal. And I was just checking UUU at that point. This thing looks like garbage. So I'm going to fast forward a little because it took a while for the setup to take place. But basically, I'm looking for this selling off to weaken, and then when I get kind of a smallish candle, like a 5 or 6 cent range candle, then I'll get in when the next candle breaks the high of that one. Let me just get to it. All right, so it's right there. You can see that excuse me. So you can see that there's my cat. You can see that the retracement here is almost 50%. It's a little bit deeper than 50%. But a good retracement for a reversal is 50% or right around there. So, that part of it looks good. And then my plan was to get in for the break of this candle, which was 27. It was the high of this candle was 216. So as soon as I saw 217, I was going to get in, and that's exactly what happened. Watch the price. There's 217, and you saw my order click in, and I got filled at 218. That wasn't like a Weeble issue. That's because that's where the next seller was at. If you look at the ask price when my order triggered, let's see. These are important little details for trading, because a new trader will think, okay, if I put in a sell order when the price is at 217, I am going to get filled at 217. That's only true if the ask is at 217, which means there's someone trying to sell their shares at 217. Here the ask was at 218, right? So if you put in let's say like you manually put in a limit order here, and you had the limit price 217, you would have put your order in, and it would have just sat here. It wouldn't have been filled. You would have just seen like that you have a buy order there. And the only way it would have gotten filled is if it bounced back down and there were some sellers at the 217. That's the only way. So this is why I get filled at 218, even though I put in the order at 217, because that's where the sellers were. So now I'm waiting, I had already decided where my stop was. The low of both of those candles is 212, so my stop was 211. I think that's where why my cursor's there. I was just kind of confirming where my stop is. But I knew that before getting in. Like I knew that my stop was going to be just below those two candles. So that's really important, because you never want to get into a trade without knowing where your stop is going to be. So now this thing popped, and I go to sell half. So there I triggered to sell half. You see the price is at 223, but now the buyers are at 222, and when you sell, you're selling to buyers. And I think the bid went down to 220 right there, right? So when my order got put in, it was 223, and I was doing the sell half, so 223 minus 2 cents. So I guess, at that moment, the bid was 220, must have been 223. And so the limit of my sell half is 221. So that's why this order's just sitting here. And then it finally gets filled. Just waiting for a seller to be above that 221 level. I mean, a buyer. I'm sorry. I was the seller in that case. All right. So now I'm still holding half my shares, and I'm ready to sell at break even if it comes back down to break even, because that's my plan. But of course, I'm hoping that it takes off. I'm already in the green on this trade, but it's very small green. I'm nowhere near making back my loss at this point. This thing would have to really take off, really run up. So I'm kind of waiting to see if it's going to do that, but I'm committed to getting out if it hits my break even at this point, because that's the plan that I trade, regardless of what happens on previous trades. Because if I said, you know what, I'm just gonna hold this thing until I make my money back, you never know. I think this thing ended up selling off. We'll take a look at it real quick. Even if it eventually curled back around, it doesn't matter, because that's not my plan. That's holding and hoping, and that's not a good habit to get into. So I think I sold half again there just because it was looking kind of weak, chopping around. There's a lower high on that candle. And then this one opened up even lower. So, there definitely is some weakness there. And then it comes down and taps my entry. And like I said, the plan is to sell all, and that's what I did. Sold all right there. So, I executed that trade well, but this one was a total fail because I shouldn't have been in it. And then the other thing I did wrong, and this is what hurt me yesterday. If you saw my video where I had like a red trade in the aftermarket, and the reason why that happened on that trade was because the daily chart didn't look good, although then I didn't look at it. And here I looked at it and I saw that, okay, it's trading near the 200 MA, but my strategy says that I can only trade it if it's above the 200 MA, or it's an overall uptrend, which it would have to be above the 200 MA for that to be true. So you can see this thing is downtrending. It went sideways here, is downtrending. There's a big downtrend here. So that's trading against the trend. And the only way I can trade in that case is if the price is above the 200 MA, because that could indicate like a gap up. And although it did gap up from this price, it wasn't strong enough to be above the 200 MA. And the more experienced traders, they say that the 200 MA is kind of like a magnet where it attracts the price to it and then it bounces off, right? So when it's on its way up, you can't assume that it's going to break out through it. It might, but you have to wait till that happens before you want to take a trade if you're a long trader like me. Long meaning you're buying, you're not shorting the stock. So that's it for those trades, and let's just see what happened. APOP, that was at let's see, it looks like around like 823, and right now it's 912. So a lot's happened since then. And let's see real quick, where did I get out at? Yeah, so my entry there was 218. And, if I continued to break my rules and average down and try to hold for profit, look where this thing is now. It's $2 and went down all the way to 197. It came down and popped back up to my 218, but this is where I was trading it, right? This was let's get the 5-minute chart up here. So this was where the first trade was right here in this area, and then the second trade was right here on this break, right? And then it came back down to my entry, and I got out there, and you can see what happened right after. It just kind of kept going further down and then a little bit sideways. It came back up to my entry. But look how long that took. And there's no reason to hold it past where you decide, okay, that the trade has failed. And this would have just been like minutes, probably like a half hour of agony sitting here looking at this thing going, I should have gotten out where I said, because it's just weakening, and then getting teased thinking, oh, it's going to come back up. It's going to come back up. And it just comes back down. That is not a fun way to trade. Believe me, been there, done that. So anyway, that was my trade for today. Lots of mistakes there. I think, my original idea was okay. It was just that I was thinking that this was a great 3-bar play, and it really wasn't yet, and then when it was forming into a 3-bar play, it never fully formed. And if I played it properly, I would have never been in it in the first place. So because of that, and because I averaged down, and then I did a revenge trade, even though it made me a little bit profit back, it still wasn't something I should have done. I am taking tomorrow off. That's my punishment. And honestly, right now, it doesn't feel like punishment. It feels like a break, because it's been a difficult week. I've had some green days and a couple of red days today and yesterday. But yeah, the market has been crazy, but that's no excuse. That doesn't mean you get to break your rules or take weaker setups or things like that. So I feel, like it's the right thing to do to take tomorrow off. I don't want to continue this, like, toxic trading is what it feels like right now. Yet, like I said yesterday, I was in a trade that I shouldn't have because I forgot to look at the daily chart. Today I was in a trade that I shouldn't have been because I looked at the daily chart but still decided to trade even though it was below the 200 MA, and the 3-bar play was not fully formed when I got in. So that's all on me. Anyway, it sucks to have to put out another video of mistakes, but this teaches me and teaches you guys that this is just how important it is to trade properly, because even when you trade by the book, the trades can fail. So when you just like make little mistakes here and there, they add up, and you're pretty much guaranteed to lose. So try not to do that. All right, guys. Sorry if I talked a little too much in this, but take it easy. Have a good weekend. I will see you guys next week. Hopefully we'll be trading better on Monday. Maybe I need to do some review this weekend. Take care.